All right, founders, welcome back. We are back in the lab, the Gab Lab, with Shauna Frederick, who is the founder of Frederick OTG, which is CFO on the go. She's also the co-founder of the Finance Café, with a good friend and cherished colleague, Shannon Peston, who's done another episode in the Gab Lab. And Shauna, I'm so excited to have you here. Well, for all of it, but part 3, the cash flow. I'm a big fan of cash flow. I believe you are too. And arguably one of the most important statements and one of the most where we have a lot of control, which can influence the other statements. So let's start as we did with the past 2 segments. What is the cash flow statement? What are we looking at?
Okay, so first of all, I need to get some technical jargon out of the way because the cash flow statement doesn't make sense if we don't get this out of the way. So I apologize in advance to our founders, but it's important. We touched on it a little bit during the income statement, profit and loss segment, but financial statements are shown on an accrual basis, not a cash basis. I'm going, okay, great. Shauna, what does that mean? So accrual basis means that you record revenue when earned and expenses when incurred, as opposed to the cash basis, which is when you record it when you actually spend that cash or when cash is received. Right? So in usual business, we're not operating on a cash basis. So we don't sell our product at the door and somebody doesn't give us the cash in hand. We don't go to our suppliers and hand them the cash. Everything is usually done on credit basis, right? So this is why we have our cash flow statement, okay? So number 1 key item that all founders need to know, profit doesn't equal cash. I can't stress that enough. Profit doesn't equal cash. So when we think about just bringing this all together, our balance sheet. So our balance sheet is what our company owns and owes at a point in time. Our income statement is the profit earned for a specific period of time. Enter the cash flow statement. This is telling you the story of where you are receiving and spending the money, the actual cash, the actual flow of physical cash coming in and out of your company. You mentioned it, Tanya, the most important statement and the most ignored statement for most founders.
Hurts my heart. It does. Not gonna lie.
So when we think about the cash flow statement, think of it as there's no other statement that's showing you how the actual cash is flowing in and out of your business. And so the importance of it is it can actually tell you where cash is being trapped inside your company. So as a business owner, how important is that to you to be able to say, okay, there's this bucket of cash here that I need to unlock. How do I know that? By looking at the cash flow statement. So high level fundamental of how, everybody hopefully has looked at when they print their report, how it's broken down. So it starts with our net income and then it takes your operating activities, investing and financing activities. And I don't want to get into too much of the detail of that piece of it because I think just the importance of looking at the statement. And again, it's showing you how the cash is flowing in and where it's flowing out of your company.
Can I just interject one moment there?
You bet.
So what I'm hearing is that typically, because you said hit the report. So this is usually when, for a lot of founders out there, they either have the bookkeeper or they have accounting software.
Yes.
And they're looking at their accounting software. And I know later on in this part, you're going to let us know some of the software that you recommend. But it's easy to say, okay, hit report. And then they get this report that kind of, it summarizes where some of this cash is being spent or not being spent. I guess where I wanted to really go with that runaway train is the data that you get out is going to be as good as the way that you've set up the system or the way the bookkeeper has set up the system. And yes, that might have been a tangent, but sorry, it took me a long time to get there, but I finally got there. And I just wanted to hammer home that message.
So important. As with any system software process, the data we put into that is the data we're going to get out. So if we think back to our shoebox method of accounting, which many founders start off doing, It's not uncommon. Don't be ashamed. I just encourage you to look at some software that we'll talk about. There is no way from your shoebox that your shoebox can tell you where the cash is physically moving in and out of your company, right? So we need to have that information inside an accounting software so that we can easily, with the press of a button, because that's what the accounting software can really do for you. With a push of a button, it can spit out your balance sheet, income statement, profit and loss, and cash flow statement so that you can look at that. And right away, when you start looking at these, numbers will jump out at you that you'll say, nope, that's not wrong. There's something missing. There's something miscoded. So you can start going back to your bookkeeper, accountant, who's ever doing your data entry, so that they can fix those nuances for you. So I don't know if that, I don't know if that answered your question.
Yeah, no, and so thank you for entertaining me on that one. I think it was a point that came up that I thought was important to just, remind founders that the data that they're going to look at is as good as the way that the system was set up to start off with. So maybe on one point there, going back to when you talked about the income statement and you talked about separating out your revenue streams and then your cost of goods, right? This is definitely on your cash flow. This is where I have always seen it. And I don't know if you want to elaborate on that at all with respect to understanding those different revenue streams and attaching cost of goods to each one.
I think the benefit really, it doesn't necessarily come in on the cash flow statement. It comes into play on the cash flow projections.
Okay, so we'll leave that.
Okay. So let's hold that thought for a minute, because so when we're just thinking about our cash flow statement, it's truly just showing us the inflow and outflow of cash.
Okay.
Because so often founders will look at their profit and loss statement, see that net profit of $23,000 and think, great, I have $23,000 in the bank. Again, not the case because of accrual accounting, right? So we have to factor in all of those items that we haven't paid for. So we look at our accounts payable, all those items that we haven't received money from our customers, our accounts receivable, the inventory that we haven't sold. So there's all these things that go into assessing how your cash is being collected and received. And again, the benefit of this statement is you can immediately pinpoint and say, hey, my receivables keep growing and growing and growing. I'm not collecting it. What do I need to do to talk to my customers? I need to then go back to my bookkeeper or accountant and get my accounts receivable listing, which we briefly mentioned in the balance sheet section. But again, it's just giving you those additional tools. So as a founder, you can make sure that the cash efficiency of your business is operating in a way that makes sense and that helps you.
Is solid. Okay. So, so one thing just to clarify, I guess, on the cash flow statement, your income statement is for a period of time. You can be looking at it monthly, you can be looking at quarterly, you can be looking at annually. Our cash flow is typically breaking it down. I would imagine that the standardized version is month over month, right? Kind of based on your fiscal, and then you can have summaries for each quarter. Again, that summary is typically your income statement. So here we are. Let's say that I'm ready to pull my cash flow statement. I go to my accounting software, I hit report. It now generates this report for me where I am seeing my revenue. Hopefully it's broken down by revenue stream, seeing my cost of goods, I'm seeing my expenses. What should we be? Because I think this is going to move us now into a forecast, because now once we see the report that has been generated for our actual cash flow, how do we understand what the flags are? What should we be looking for to say, okay, something's not healthy here. Now I need to plan to kind of fix where the gaps are, where the flags are. What should we be looking for?
You bet. So it's looking for those. So first of all, we go way down to the bottom line and see the net between our cash inflows and outflows, right? I say, okay, and when we're looking at it on that month by month or week by week basis, if we're constantly seeing that the amount of money that's going out the door versus going in the door is negative, we know immediately there's a problem and we need to stop that bleeding. We need to say, okay, let's go back to first easy place. Customers. Are we collecting from our customers? Inventory. Are we turning that inventory over, or do we have those dusty dollar bills sitting on our shelves not being sold? Suppliers, are we paying our suppliers too quickly? Again, something that founders are, I mean, it's we're all keen, and especially when we just want to get something off our desk. This is an easy one. I'm just going to pay it and get it off my desk. Again, if we're paying out quicker than we're receiving that money, this is where founders and businesses can get into so much trouble, because they're assessing the cash by either their bank account, which is not a great place to assess it, or their profit. Again, profit doesn't equal cash. You can sell all of the product, all of the services that you want. If you aren't collecting that cash from your customers, you are going to go out of business.
So important, so important. Okay, so let's say they've gone through this now, they've recognized they have a few challenges. I will put out there, typically what I have experienced in the past, let me know if you see this too, is that in my experience, and I know this wasn't your experience, but in my experience, most business owners are not generating a healthy profit. They're generating anywhere from 3 to 4% if they're lucky, but they're not accounting for all their true expenses, including management salary, right? They've forgotten to pay themselves, or they've just been squeaking by with a dividend that will just pay the mortgage at home.
You bet.
And where they tend to be losing that money, you made so many great points with respect to, are you collecting it? Your suppliers, are you paying too quickly? I think that's a huge point. Where I've noticed that where they hemorrhage their profit is typically in their cost of goods and in their pricing strategy. So they aren't really, they're just doing high level, very surface cost of goods. Oh, I'm selling the lemonade. Oh, there's the juice that went in it. There's the cup, there's the napkin, but they're forgetting the merchant fees. They're forgetting the labor that went in it. They're forgetting filtering the water. So now can we shift over and move into the forecasted cash flow? It has a couple of layers or labels as well, doesn't it? It goes by a pro forma, goes by a forecast.
I mean, and it can even a budget, right?
And a
So
budget.
it's all of these things that, and again, I want to touch on the word budget for a minute, because often, and especially as women, when we think about budgets, what do we think? Restrictions, negative, I'm being held back, I'm being judged, whatever that is. So we need to get rid of those mindsets, and we need to call our projections and our budgets what they are. We are setting the goals. We start with our personal goals, which lead into our business goals, which leads into our budget. So when we think about budgets, forecast, projections, again, all the same thing, but setting us on a roadmap to success, our financial roadmap to how we can achieve the goals that we've initially set out for ourselves.
I love it. And if I can add one thing, it's actually saying the same thing, just a different way.
Yep.
This is your responsibility, founders, to see your business as the CEO. Like, you are the chief executive officer, and you have to figure out what is in the best interest of the business. So this bootstrapping and you doing all 5 roles and cleaning the toilets while you're out there servicing the client does not fly. If you had a board, the board would say this does not fly, right? This is the value of the board, which you might want to budget for in your cash flow. But I love that you mentioned that. Thank you for that reminder, because it's time to stop bootstrapping. Yes, being smart and being efficient with respect to understanding the true costs, but so many times the true costs aren't even close to where they need to be, right? So sorry, that again was another tangent, but I love that you brought it up.
No, it's important. And you bring up that important aspect of management salaries, because when we're first starting out as founders, that's the last thing that we do. We don't pay ourselves. And then we get into this habit, and then we grow this successful business. And when it comes time to sell, if that's what your projected goal is, you're in it to sell it. If your owner's salaries or a reasonable salary for somebody doing the job that you are doing aren't in there, the value of your company automatically gets reduced because you've been overstating the value of your company, because you're missing that key expense. The key expense of having the CEO role, the CFO role, whatever role you're holding has not been included for the 5-10 years that you've been in business. And right away, that's the first thing that a potential buyer is going to look at. Well, have you included these important salaries?
Yeah, brilliant. Okay, and so I think that, when we talk about the forecast, we talk about oftentimes the forecast, and maybe I'm wrong, so let me know. This is something that we have to use a template for, and we have templates, so download the template, it's in the show notes. This typically, we can't rely on software to do our forecast for us, correct? Yeah.
Correct.
Okay.
And there's what we can rely on our software for is to give us a starting point, right? So
Yeah.
I always encourage founders, start with your last fiscal year end income statement. It has your revenues, your expenses, and then we start looking at things like, go back to your goals. What are my goals for the next year? And they have to be SMART goals, right? They have to be attainable, reasonable. Like, you have to be able to, to tie back to your goals in order to project into the future. And again, budgets, forecasts, projections, they are just that. They can change over time. They can change in a year. You simply want something that you can hold yourself and your team accountable for. Right. So so if we start with our income statement and we project it out. So where do I want my company to grow? What are my key levers? Do I want to start, open up a second location? Do I want to hire a CFO to have to do this role? All of those items. And with taking that, then you can take it into your cash flow projections, right? So that you can actually tell and assess based on your historical financial information, how your actual cash flow is going to trend. And again, some things are always going to change, and that's okay, but at least it gives you that forward-looking projection. So you can say, you know what, in Q2, we're going to run into a cash crunch here because our major project isn't starting until Q3. What do we need to do? What do we need to do in advance to monitor for that? Going back to, collections, inventory turnover, supplier payments, do we maybe need to hold off hiring that third individual until Q3 when our project ramps up? Or do we need to go, seek some external financing? And I think Shannon Peston, my co-founder at the Finance Café, likely spoke about this. The time to go talk to your bank for getting financing is not when you're having cash flow troubles.
Yeah.
You want to set that conversation up the minute you open your business and say, you know what, I'd like to start with a line of credit, even if it's $10,000 and a credit card for my business. So we're separating those business and personal expenses on a different credit card. And from day one, you set up a relationship with your banker, more importantly, the credit with your banker. So when things might get in a little challenging, you have their support because you have a history with them. And more importantly, when you're looking to expand, you have the financials, historical, you have your budget, and you have your cash flow projections. You go take it to the bank and they'll be thoroughly impressed with the information that you can provide them and be willing to work with you and support you.
Yeah, that's fantastic. And I think too, when I think about our episode champion, Community Futures, it's such a great place to kind of turn to make sure all of these numbers are adding up, because they're a soft place to land. They're not giving you a hard yes or no. They're giving you, here's what it's going to take to get to yes, right? We've got to tighten all of this up. And Shannon, what I love about what you just mentioned there, sorry, I said Shannon, Shauna, is the cash flow is the only document that can show us our working capital needs, right? The cash flow forecast is the only document. It'll show us, what months we just don't have enough operating capital to cover the expenses on those months that our sales are expected to be dry or slow, right? And seasonality happens in every business. You're going to see ups and downs. So thank you for mentioning that. I think that's such an important piece here. And then, as you talked about, as Shannon had said, is going ahead of time. Don't look for money when you're desperate for it, right? Go to them and explain, I've done my cash flow projections, and that in itself will be you'll get brownie points for that. Last piece on cash flow that I just want to speak to here. You mentioned when we start talking about, when we were talking about budgets and just how we do things at home, one of the things that I have noticed, again, I've got my behavioral hat on, behavioral finance hat, is that we tend to do what we can with what we make. And I see that oftentimes in business. It's like, oh, I only have this cash flow coming in, I've got to squeeze these things out. And so this idea of kind of reverse engineering the numbers, understanding, what do you want your profit to look like? What do you want the overall value of your business to look like? I've always thought of a business as an investment, right? Like, this is my investment. I'm building an investment. I'm not building a business. I'm not building a job for myself. And so understanding when I know what I want this investment to look like, that then informs my net profit goal, which then I can reverse engineer all of those numbers. And then when I understand the net profit with the operating expenses and the cost of goods and a healthy price that's based on value, now I know what my sales need to be. And so so that was just this full circle moment that took us right back to the balance sheet. And
I love it.
The value. Oh.
I love it, because value is so important, right? And we often, as founders, we think, okay, well, I often think of it to myself, well, I'm not that smart. I have this information, everybody else might know it. But in the reality, everybody trains and everybody has skills and experiences in different areas, right? So the value that I'm providing to another founder, they are willing to pay for that. Right. And there's areas that I'm weak in, so I'm willing to pay for that. So we can't look at the value of what we're worth as to what we'll pay for it for ourselves. It's the value that we're providing to other people. And that's why it's so important that we go into business with relationship transactions as opposed to transactional based transactions, because that value comes not only with the service or the product you're providing, but just that whole full circle relationship that goes into it. So
I love it. So maybe if you're okay hanging out for another couple minutes,
sure.
Can you then explain the value that a CFO to go or to hire, because I know big businesses have them, right? Major corporations have boards, they have CFOs. You offer a really a very unique service for founders, and one obviously that I believe is of most value. There's a lot of significance there. If we're not making money in business, we're not in business. So can you explain your role or the role of a CFO, and not interim CFO, but a CFO on the go, or a contract CFO for a founder?
Yeah, of course. So I started my practice after working in a public accounting firm. So I was, one of the accountants that founders would bring their year-end information to 3, 4, 5 months after their year-end. I would go through the information and present that to them, and oftentimes get that blank stare or shock and awe that things were happening or weren't happening. And I quickly realized that there was a disconnect between many founders as to the financial information they were receiving throughout the year. So my goal with Frederick OTG is that I'm taking that sort of bridging the gap between, so we have our founder, we have our internal accounting team, and we have our external accounting team, right? They're all sort of working towards the same common goal, but not necessarily building that information connection so that everybody's on the same page. So the role of a CFO in, its true form is to really, monitor your cash flow and analyze the business and make sure that, your profitability is all good, you're collecting your cash, and really overseeing that higher level goal and connecting with the founder and giving them the information they need to make sound evidence-based business decisions, right? So often founders are going on gut, or their bank statement, or their top line sales. We need to be able to bring all of that information together to say, you know what, this is what the financial information is telling us, right? The numbers at the end of the day don't lie, providing you're getting all the information in there correctly. And CFO for the founders that I work with, everyone has a different need, right? So, I mean, it's bridging that gap and building that connection and building the confidence, capabilities, and connections for these founders to give them the most useful information in a clear and concise way. So again, they can make those evidence-based business decisions to achieve their overall goals and their objectives for their company.
Oh, so important. Because just like you're saying, I see a lot of founders that are abdicating their numbers. They're relying on the accountant, who in most cases is there to do the year-end report, right, and mitigate taxes. We've got a bookkeeper who in most cases is there to enter the data. And then we've got this huge gap where it's, between entering in the data and actually making sound decisions. So I so value the work that you do. It's so important. And it's nice to know that founders are able to access someone like you, if not you yourself, to help them make those decisions. And again, just a nice soft place to land, right? Where there's no judgment and no, the judgment and just really being able to guide and direct that founder into sound financial decisions. So important. So thank you.
Tanya, I want to reiterate that point, because again, entrepreneurs don't go into business because they're good accountants for the most part, right? And it's getting rid of this taboo topic that as an entrepreneur, I need to know, what my financials are saying and how to read them. We're not trained through school to how to read financial statements. And for women in particular, I mean, it was taboo to talk about money. So it's getting over this, societal, okay, we can't talk about this. No, let's bring it to the forefront. Let's really understand, and let's call out our, again, going back to confident humility. I don't understand. I want to understand. Please help me understand. And just keep asking the questions of your accountants, of your bookkeeper, if you have that CFO in place. Say, you know what, I don't understand this. Can you give me an example? Help me understand what this is telling me or why this isn't telling me. And being able as a business owner to say, okay, if I increase my selling price by 5%, I know exactly the trickle effect of that. If I want to open up a second location, I know exactly how that's going to impact my business. Being able to know those answers as a founder is so empowering and so important.
Yeah, being able to defend, right? And this is why I love the cash flow template, to be honest with you, because if I increase my price from $1 to $1.25, what does that do to my net profit? Like it does all the work for you. There's really, there's nothing hard about it. So thank you. I think the other really important piece here that you mentioned is getting past the stigma and getting past the fear and the courage that it takes to move forward. And if I can just add, just take small little baby steps. It doesn't happen overnight. You don't need to climb Everest, in one shot. It's usually just reach out to Shauna as a starting point, right? And like, it's just one small little baby step in front of the other that starts to build your confidence over time. The thing you have to do is take the first step. That's what you need to do. And that's why we do these episodes. And Shauna, thank you so much for doing this episode with me on basically understanding the fundamentals of these financial statements in general. Because there's a lot of gray around them, I think, for a lot of founders. So thank you for clarifying and cutting through that confusion. With that being said, I'm just going to remind founders that there are a number of tools in the show notes below. There is the cash flow template. There's also a tool called the highways and hazards, in which you can enter in data for your past fiscal years, and we'll convert everything into percentages. And it lights up what has been working and what has not been working for you. So that's there as well. So don't forget to download those things. Shauna, are you okay if people reach out to you directly? Can we put your contact information in the show notes below?
Of course.
Yeah. Okay, perfect. And again, just a huge shout out to our episode champions, Community Futures of Manitoba. They've got over 16 offices across the province to help founders in rural parts of the province build their business and nail the numbers. And this episode, all on financial statements, would not have been possible without your support. So thank you, Community Futures. So value what it is that you do. And founders, we value you too. So thank you for being here. Thank you for watching and listening. And we'll see you back in here for the next episode of the Gap Lab. Bye for now.